Welcome everybody to R&B Wealth Strategy Network's business funding stipulations. You're going to get a lot of great information, especially for those of you that are more interested in the business financing than any of the other spaces that we have. So I'll make sure that you guys get all the information that you typically need. Okay, and I say that because for the most part, everything that you really need will come from this video. Okay, there are sometimes some different stipulations that are required for different merchants, but that is not the end all be all or the norm. There are just some things that change from for certain businesses because they might be lacking something else, so we're able to help them to make up for it in another area. Okay, but for the most part 95 if not 98% of the time, all the information that is here is all you will need to know to be able to get a business funded. One second. Let's get started. Okay, first off, I just kind of want to give you guys kind of an understanding. One of the reasons why we actually even push so hard for the business funding, okay, is because of the numbers that are involved. Okay, the type of loans that businesses are able to get, the majority of people, even if they did have great credit, they're never going to get. Okay, they're not going to get 100,000 or 200,000 or 300,000. Okay, so when you're doing those type of numbers in business financing, the commissions become higher. Okay, so we want you guys to be able to get paid, and when I say paid, I mean really paid. Okay, you have to put in the time and the work to not only learn this knowledge, but to also to follow up and speak to your clients and educate them on the process. So we want you guys to be able to be properly compensated for your time. Okay, so the higher the amount that these businesses are able to get financed means the more money that you are able to get on your commissions. Okay, this is actually a breakdown that one of our lenders sent to us. Not only just us, but some other brokers that are also involved in the business, and the type of I should say financing that these kind of companies are receiving. Okay, these are averages, and these are like the top industries that are actually getting funded the most. So basically as we move along they want to keep us up to par, and of course we're always in their ear staying up to par no matter what. But the same way we want you guys to focus on specific businesses and to focus on business loans, they kind of do the same thing to us. Okay, these are the industries that are really moving right now. Okay, so if you're focused on anything, focused on these are the ones that are easier to get financed. Not saying that other companies can't get financed, but these companies are doing big numbers. They're doing great business already, so to get them financed is a lot easier. Basically how everything breaks down in the alternative lending world and in the banking world. If you're making money, everybody wants to give you money. Okay, so these businesses, they're making money, so now they got lenders that are just throwing them the cash. Okay, and you can see a lot of these companies on here, they're different different industries. Some of them are gas stations, kitchens, restaurants, educational services, telecommunications, I mean so on and so forth. The list is really vast. Okay. This isn't all of them, but this is some, and you can see the type of numbers on an average that they're actually able to get funded. Okay, so just as like an example, what I typically like to do for everyone, to kind of show you what you'll kind of be looking at. Okay, so if you're paying attention to the screen and you logged in and you're able to see your screen and you're not just on your phone, then you can see it like up in the left hand corner where it says food services and drinking places. So basically, that's like just different kinds of restaurants. Okay, for the most part, for the average, they're able to get about $95,000 in financing. Okay, so what does that mean for you guys? What type of paycheck are you able to receive from that? Okay, when you're doing numbers that high, okay, you're not gonna like actually try to kill the business by overcharging them, because you can't kill the deal by trying to take too much. That's part of the reason why we give you guys so much leeway to be able to charge anywhere between 1% and 5% when it comes to businesses. Okay, but just as an example, so let's say you're able to get a restaurant and they're doing pretty good, and then we're able to get them $95,000 in financing. Okay, so you do 95,000. Okay, times, and let's say you end up charging 3%. So let's just say 3%, because that's kind of a safe number. All right. So 95,000 times 3% is just a little over 2,800. That's 2,800. That's a paycheck. That's a real paycheck. I mean, there's some people that's not getting that in a month, and you can get that off of one deal. Okay, so we really push for you guys to be able to focus on the business financing, because the commission checks are a lot larger. Okay, so if you're a mover and a shaker and you're able to get into to the great circles where you're able to get businesses, these kind of deals, all right, you're in a great space. All right, so I don't want you guys to get discouraged by the numbers. Okay, it's all about who you know, your network, how you're marketing, what type of social circles you're running in, where are you going to network, so on and so forth. If there's other people doing these deals, you can too. I mean, that's basically how you should feel about anything when it comes to life. If another man or woman can do it, you can too. So don't never put yourself down, because these aren't deals that are being done by the lenders. Okay, the lender is just financing everyone. Okay, these are deals that are being brought by average everyday people like us. Okay, the lenders wouldn't even be able to give out as much money as they're giving out if it wasn't for people like us. They're not promoting, they're not marketing, you're not seeing them all day every day in your face, on the television, in the newspaper, in the magazines. You might run across some of them that are online, and probably a lot of them only want to deal with you if you're a company. They're not really dealing with individuals. Okay, so remember that they need us, and we are the ones that are actually doing these kind of deals. All right, this is just another quick breakdown of the industries that that can be financed, and this is more specifically for us. There is a lot more companies that we can do. Actually, it is almost easier to be able to say what companies we can't say that we can't do versus the ones that we can. Okay, for the most part, the ones that we can't do are like other financial institutions, financial planners, credit repair companies, so on and so forth, things of that nature, adult entertainment services. Okay, so there is there's a handful of ones that we can't, and then basically it's fair game for the rest of them. Okay, but for the most part, we do some of these up here because some of these ones that are on here, they are a little bit harder to fund. Okay, but they still can be funded going through our channels. Okay, some of these places on here you probably never even heard of, like an aerospace service. Okay, if you're actually in that space, I mean, kudos to you. Okay, but for the most part, when you're looking at some of the ones that are on here, like construction companies, okay, there are small and large construction companies that are out there, but for the most part, construction is kind of volatile. You're not getting paid regularly, so the lenders kind of shy away from that. But they will mess with you if you're making money. Okay, once again, if you're making money, they want to give you money. So if you're a construction company and you're doing at least about $50,000 per month, we'll be able to get them financed. Okay, even for commercial establishments. if they're doing about $50,000 per month, we're able to get them financed. All right. Bars and nightclubs. Okay. That's another kind of risky industry, but at the same time, hey, if they're doing at least $25,000 per month, we can get them financed. And yes, you do see medical marijuana on there. If that establishment is actually doing $100,000 or better, okay, we can get them financed. Probably, if I'm not mistaken, medical marijuana is the most volatile industry that we are able to fund. Okay, it's one of those ones that's caught between a rock and a hard place, but because it is making money, a lot of states are finally accepting it. I don't know if the feds will ever accept it, but that's another story. That ain't got nothing to do with us. If our lenders will fund it, that's the whole point. Let's get them some money. Okay. So those type of industries are a little bit harder to fund, but we can get them funded. All right. We can typically do anywhere between 10% and 120% of a merchant's average gross. Okay. So that basically means what they're basically doing on a monthly basis. Okay. That's typically around the range of what we're going to be able to get them financed at. All right, so if you got a company that is doing about $100,000 a month, and then they come in and they're like, I want $1 million. Sorry, that's not how the alternative lending space works. You're making about 100. Okay, you should keep your fingers crossed. So hopefully we can get you the same amount that you're making on a monthly basis, but depending upon what's really going on in your business and your bank statements, okay, that might even vary. All right, because if you're like spending a whole bunch, you might be making $100,000, but you're probably spending $80,000 every month on bills or whatever. Okay, so that'll change some things. So always remember that too. Just because you end up getting a company and they're making big money on a monthly basis, okay, this is what I always say. Let's wait until the check is cut. All right, because some things can change. We go in and we looking at their bank accounts, their bank statements, and we're seeing, oh, you're spending a whole lot of cash and you're retaining very little. It could change some stuff. Okay, so don't get your hopes up. But the great thing is, if a company is doing big numbers, let's give them a look. Let's run them through the stipulations, and let's see exactly what we can get them funded, and make sure that you get paid in the process. All right. This is basically what we're going to end up covering tonight. Okay, we're going to talk about strictly business financing for tonight. Okay, you guys are on the West Coast, but it's fine. We're going to catch you up and get you up to speed with everybody else that's been with us a little while longer. Okay, so we're going to talk strictly about business financing tonight. Merchant cash advances, loans, and construction loans. All right. The stipulations are typically always going to be the same for the majority of them, and if they're not, we have it here, and if you don't see it here, then you can always ask in the chat, or you can call the office and we'll give you some clarification on that. Okay, funding stipulations, and this is typically it is the basics, but it's not the basics. Okay, but the main thing about this slide is that if it's on here, okay, then it could be a possibility that it is something that is needed. All right, not everything on here will be needed when we are going through the funding process of getting somebody some cash. Okay, but this is usually what is asked. All right, so if it's not on here 90% of the time, we will not need it. But like I said, some things do change with different businesses, and we have to make up in other areas for some of the things that they are lacking. Okay, so for the most part, here it is. We need proof of ownership, business license if applicable. That doesn't mean that they have to have a business license, but if their industry requires them to have a business license, then we will you'll need to see it. Okay, 3 to 12 months bank statements. Once again, if applicable, it depends upon the size of the funding that they're looking for. Typically, we only need 3. Okay, merchant processing statements, if applicable. Not everybody is dealing with a merchant account accepting credit cards. That's fine. Okay, we need a copy of the lease agreement, business voided check, signed credit report agreement. We definitely need that because in the final underwriting process, we will be going in once again to see their credit, and we will be even checking their credit during the pre-approval process. But that's not a hard pull. That's only a soft pull. Okay. Year-to-date P&L statements for deals $100,000 and above. So of course, if they're only getting a $50,000 loan, then they don't need that. Copy of owner's driver's license. Sorry, I keep coughing in you guys' ears. We're going to need that. At least a 500 credit score. Okay. Always remember this too. A 500 credit score does not mean, woohoo, I'm in, I'm going to get paid. No, a 500 credit score is the bare minimum. The bare minimum, okay? So you're at the threshold, so you're definitely going to be looked at a little bit closer, okay? 6 months in business at least, okay? We typically like to deal with people that have been in business a year or better, but at the very least 6 months, and if they've been going strong and they've been making money and they meet the requirements that we have here, then we can still get them funded, okay? Bankruptcies and foreclosures must be at least 2 years old, okay? Actually, the older the better, and at least be adding some positive information even after that, because even though it might be 2 to 3 years old, but it's like, okay, what have you been doing since then? You know, it's like you're just not trying to take ownership of bouncing back at all. Okay, so any negatives, basically, we want to see some history being put between you and that negative. Okay, deposits of at least $10,000 a month, going back 3 months, okay, or 12 depending upon funding amount. All right. A maximum of 5 non-sufficient funds per month. Okay, that is something that could also kill a deal. A company could be doing big money, but at the same time, they're spending a lot of that money, and you know, they just end up like severely damaging their bank statements. Okay, you see big money coming in, and then you just see big money going out, and then it's going into the negatives, and you know, or they're bouncing checks and so on and so forth. Okay, nobody wants to see that. That means a high risk business owner, and lenders are looking at you like, hey, if I give you my money, am I gonna fall into the cracks on some of those months, okay, or on some of those days? Because you know, a lot of the payments have to be daily or weekly. Okay, so we don't want to see too many non-sufficient funds in a business statement either. All right, like I said, any additional information that we'll need, we will ask for it from the business owner, but that's on a case-by-case basis. That's not like something that we can just sit here and really predict, because sometimes it's something that might be a little out of the ordinary or whatever, but hey, it's still to help the business owner to be able to get financing, okay, especially if they're lacking in one of the basic areas like what we have up here on the screen right now. All right, moving on. Merchant cash advances. All right, this is basically the main business financing product that a lot of businesses are going to get. Okay, a lot of businesses that might know a little bit about MCAs, business loans, and business lines of credit, they're going to be like, okay, I don't want the merchant cash advances. I either want a business loan or I want to get a line of credit. Okay, well, most of you guys aren't even going to qualify for a line of credit. If you could, you probably would be going to a bank and you wouldn't be talking to us. Also, business loans, they still fall in the category of having to pay things back daily or weekly. Okay, if you want something on a monthly basis, once again, you're going to have to go to a bank. Okay, so when they hear merchant cash advances, the only thing that they typically hear is that, oh man, I'm going to have to pay back payments on a daily basis, and they're going to be huge, so if you end up getting like a $10,000 loan, you might end up having to pay it back within 90 days or something, and they don't like that. Okay, but hey, it's the nature of the beast. Okay, but we will get you funded, and if you're handling your business on with your business, okay, you take that 10,000 and you do what you're exactly supposed to do, and you make sure you make them payments back. And then if you need additional funds later on down the line, then we can get that for you too. Okay, so if you're running into people that have all these great suggestions for you on what type of financing that you need to get for them, you let them know. It depends upon what you qualify for, and everybody's different, but what we will do is seek the best possible course for you. Okay, but like I was saying in the very beginning, a lot of times these businesses, this is what they're going to qualify as a merchant cash advance. Okay, and typically what we need for people in a merchant cash advance is 1 year in business. Okay, once again, we can go as low as 6 months, but that business has to be doing pretty well, because they got a shorter amount of time to do well, because they're still going to have to produce those bank statements. Okay, at least 500 credit score. Okay, at least 5 deposits per month. Okay, so if they're making about $8,000 a month in revenue, then that has to be broken up in at least 5 deposits. So they're seeing, okay, this is a company that's doing business. They just didn't snatch $8,000 out of their personal account and then deposit it into their business. Okay, so we have to see that that money is being broken up and is coming from your different clientele or customers or whatever. Okay, so they have to be doing at least $8,000 in revenue, but typically we say $10,000 a month. Okay, once you get down to around 8,000, that's like getting down around the 500 credit score. You are at the threshold. Okay, you are borderline closer to a no than you are to a yes. Okay, so typically when you guys are looking for businesses to be able to offer them financing, I would always say jack that up about $2,000 more, $10,000 a month in revenue, and at least a 500 credit score, and then they'll look a little better. Because I mean, if you get a company that is like at the borderline on both, on the revenue that they're making and their credit score, I mean, you're tiptoeing on being a risk to the lenders, and the lenders aren't into taking risks; they're into making money. Okay, factor rate. It may vary between 1.3 to 1.5, depending on the overall file and the term of the deal, and then they have anywhere between 7 and 18 months to pay it back. Business loans. All right, if a company is making around 85 a month, but once again, like I said, always look for companies that are doing 10 or better. Okay, then they're basically good on the money that they need to be making on a monthly basis. Okay, 1 year in business. Typically, that's about the same for all business loans. Company needs to be around at least for a year doing business. Once again, at least a 500 credit score. No bankruptcies or foreclosures in the last 2 years. Okay, minimum average bank balance of at least $1,000. Okay, at least $1,000 left into their account. Okay, it can't just be bone dry, even if they do got a lot of bills that they're paying. Okay, a minimum of 5 unique deposits per month. Okay, basically the same thing as the merchant cash advances. Okay, if they're making $10,000 a month, that needs to be broken up at least 5 times. You can't just take $10,000 loan out from somewhere else and then deposit it into your bank account and say, hey, I just made $10,000 this month. Okay, that typically doesn't work, and the lenders they're on to that. Okay, max allowed non-sufficient funds, okay, are 7 in a month. Okay, so it's a little bit higher for the business loans, but once again, you don't want to even tiptoe close to that. Okay, if you have a couple in a month, okay, that's bad enough. All right, but the max is 7 in a month. Okay, and and 12 in 3 months. All right. So even if you got a client and you're trying to actually describe these things to them, it's like, okay, 7 in a month, so that means I can actually have 21 in 3 months and I'm still good. No, 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 because if you're over 12 in 3 months, then you're already up out of there. All right. So make sure you guys are explaining some of this stuff to these your clients, and they're getting a real understanding. So they're basically not wasting your time and they're not wasting ours, because if they're maxed out and they got a whole bunch of non-sufficient fund charges, they're going to look like a risk, and they're not going to get funded, and then they're spinning their wheels, you're spinning your wheels, and we're over here shuffling paperwork and trying to negotiate, and ain't nothing really going to happen for them. Okay. Also, last but not least, max allowed negative days. Okay. 5 in 1 month and 8 in 3 months. All right. Payments. Okay. For everything that's business financing, whether it's called working capital loans, merchant cash advances, okay, everything is basically going to be paid back daily or weekly. Okay, if you are one of the ones that happen to get blessed and you are able to start making your payments back weekly versus daily, okay, great, kudos to you. You were a better fit for that program. Your credit score was probably a little bit better. Okay, so they were able to take a little bit more of a risk on you. Okay, but that's typically as good as it will get. All right. Payments are made 5 days a week. Okay, no weekends or national holidays. Okay, so that's great for the business owner. So basically, if they're open, they're a type of company that's open 7 days a week. Okay, hey, you got your 2 days off. Make that money. Hurry up, make it fast. Okay, because you're back to making your payments again Monday through Friday. Okay, and payments are fixed or adjustable. All right. Some people might lean one way or another for each one, but it's gonna boil down to what you qualify for. You could say you want fixed, but then again, the lenders they may make it adjustable. Okay, and then it's just up to you to decide whether this is the type of financing that you want to accept or not. Alternative lending versus the banks. Okay, I kind of want you guys to get a little bit of an understanding about this. Okay, one of the things that we've been running into with some of our other agents, our business partners, I like to call them, they need to start properly describing to their clients, okay, who we are and the difference between us and the banks. Okay, because sometimes you could have an agent have a client that wants business funding. Okay, they haven't even been to the banks. They've never even heard about alternative lending. But then, once we look at their file and we see, okay, great, we can get you financed, but we already know that no bank is going to give them any money. So they end up getting some type of qualification from us. They get qualified for a certain amount, and they're like, oh, wow, the interest is just a little too high. I don't think I can deal with that. I'm going to try the banks. And then they try the banks, and then they get denied because their company isn't good enough for the banks. Their credit score wasn't good enough for the banks, and now they got a hard inquiry, and then they go and try some other banking institutions and get some other inquiries, and then try to come back to us after you've wrecked your credit score even more, and then you end up getting a denial when you just got an approval. Okay, so make sure you guys are properly educating your clients on the difference between us and the banks, and basically gauging and getting an understanding for them, because if they think that they're gonna come to us and get like the best interest rates possible, they're sadly mistaken. The interest rates are higher in the alternative lending space, but the requirements are much lower, and you see some of the requirements that are up here. Okay, basically it's no tax returns under $100,000. Okay, but when you go to the bank, they want at least 2 years tax returns. Okay, so a lot of times you're really going to get stuck because if you need 2 years tax returns to be able to show to a bank, and you only been in business for about 6 months, how are you going to do that? All right, with alternative lending, we can go as low as a 500 credit score. All right, 500 gets you in the door. Okay, at the banks, a 680 get you in the door. All right. With us, we're definitely going to coach you, because sometimes that's what it boils down to. We have a lot of business owners, and they're kind of, just lacking knowledge when it comes to what to do when you're trying to get funded. And we coach them through the process so we can help get them funded. And you're not going to get that from the bank. The banks aren't going to coach you on what to do and what not to do, on what to file and what to structure properly before you even submit an application. They're just going to tell you to fill out an application. And after you fill it out and you don't know what you're doing and you haven't presented everything correctly and you get denied, you just get another inquiry. Okay, so we're coaching our clients, and the banks aren't going to coach you at all. You also get a dedicated agent, because one thing that we definitely push for is for the financing that we're doing for your clients is for you guys to bring those clients. Okay, so they have a point of reference with you, someone to talk to, someone to also follow up with them, and then they also have us, and we're providing that great customer service, and we're processing their application. Okay, you're not getting no dedicated agent at no bank. Nobody's following up with you, reminding you to send in your bank statements or so on and so forth. Okay, you're not going to get none of that. All right, so sometimes people just need a little support, and that's what we do. We provide that. We do a soft pull to pre-qualify. There is no soft pull with the banks. It's a hard pull only. Okay, and then with us, there's multiple lenders that we're able to shop your application with, and when you're dealing with a banking institution, okay, it's just their financing products, period. If you don't qualify for what they got, then it's just a hard query, a denial, and then you have to go to a separate institution to try to utilize their services. Okay, but with us, everything is on one platform. Okay, we do our own underwriting within the company, and we figure out which lenders are best suited for you, because there are some lenders that we know that certain businesses won't qualify for, and we're definitely not going to waste the lender's time by sending someone over there that we already know won't qualify. So we make sure that we tailor your application for the lenders that are good for you. All right, just a little bit of facts, to kind of square up everything a little bit. Hard money is quick and it's easy money. Okay. You can get funded, okay, within 1 to 3 days. All right, it typically doesn't really take that long. That's one of the things that is lovely about the alternative lending space. You can get funded pretty quick. Okay. If a deal is over 100 grand, it can take a little bit longer, 7 to 10 days, but that's not like 30 to 60 with the banks. Okay, I mean, when you're talking about some real large money, okay, you're not gonna get that overnight at no banking institution, and if you're getting that within a week, with us, hey, that's a faster turnaround for you to be able to utilize those funds. Okay, also, before you even pay back the first loan, you can take out another loan with us. Okay, that's one of the great things about what we do. We can go up to 5 positions. All right, if you don't know what positions are, typically it's just saying that you can have up to 5 loans out before you've even paid back the first loan. Do you have to show consistency with making some of those payments back before you're able to get another one? Of course you do, but you can build trust really quick. You take out one loan, after a couple of weeks have gone by and you've made those first payments, we can start the process with trying to get you some more financing. Okay, but you have to do what you're supposed to do with the first round of financing that you got, and we can typically go up to 5 positions on that. Okay, with alternative lending, once again, okay, there are no financials. Okay, there's no tax returns, okay, or collateral that is required. All right, that's like what do they call it? A breath of fresh air or whatever for a lot of businesses. Okay, they don't want to have to show all that information. Okay, and it could possibly even hurt the deal if they did. Okay, so we don't require that. Okay, that's some facts about hard money. And the great thing is, you know, when it boils down to it, when you educate your clients properly and they understand the benefits of doing business with us versus the banks, even if they could qualify for the banks, then they would love what you do a whole lot more, you know, especially when you're providing that personal financial information to them, because a lot of them, they just do not know. Our last product is construction loans. If some of you guys are actually able to do construction loans, it is a great space to be in. It is a little harder financing to get, okay, because you can typically see the requirements that are up here. Construction company, for our first product for construction loans, a company has to be in business at least 10 years. Okay, they have to have at least a 625 credit score, doing $100,000 per month in revenue. Okay, and these are one of the programs where they're going to have to provide that 12 months of bank statements. Okay, and quick tidbit real quick, those are business bank statements, not personal. Some businesses do run their business out of their personal account. It can never be a personal account for any of the business products that we have. It always has to be a business account. Okay, so 12 months of business bank statements. Okay, and 2 years personal tax returns. Now, this is one of those times where you will have to provide some tax returns. We're talking about some serious cash here, because if a construction company is doing at least $100,000 per month in revenue, they are going to be looking for over $100,000 in financing for whatever deal that they're doing. And typically, they're not even going to be asking for $100,000. They're looking for something a whole lot bigger. The paybacks will still be daily and weekly, okay, and we can loan up to $5 million. Our last product for construction loans, okay, this is for companies that have been around for about 3 years. Okay, same stipulations, a 625 credit score. They have to be doing at least $50,000 per month in business revenue, and then all of the other requirements are the same. All right. I want to open it up for questions for you guys. I'm going to stop the recording on the video, and I appreciate everyone for being on here. Thank you for listening. And if you have any questions, ask in the chat or call the office.